Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, January 7th, 2013. All right, we had a very exciting last week. Let's see if we can find out anything from the waves. This is the S&P for all of last week. This huge gap up on Monday, then a holiday, then Wednesday, Thursday, and Friday. I'm going to show you something on the tick charts that are a little bit more of an inside track of what's going on during the daytime. But let's take a look at this. There's a gap fill that happened back in on December 21st, and there's a gap fill that happened. I mean, there's not a gap fill, a gap on December 31st. So eventually, this gap has to be filled. Now the waves are saying the A wave, the trading waves, A wave is, I'm sorry, not A, sorry, T1. These are all Triton waves, Triton 1, 2, 3, 4, and 5. Triton wave 1 is saying it's above 0. Triton 2 is saying is halfway. And all the rest of them, T3 is completely under 0, T4 is halfway, T5 is a total non-confirmation of peak here with, you see above the cash price, a higher peak, a lower peak, and the two peaks are even here. So we're at a point in this trade, in this market, where all the surprises, I mean the surprise of Congress had this leap forward turnaround on Monday, and then the subsequent higher day. Okay, to review, I know those of you who have been following me already know this, but this was the Bernanke push of $42 billion extra a month into the economy. This was the Mario Draghi push here. The failure of the Chinese was the failure of Japanese and Chinese was in here. They tried to bump it up some more. It did not happen. And then the market came down. All right, it pushed back up again. It started creating a right shoulder and then went a little higher and collapsed. Into the end of the year, profit taking, portfolio management, and all that stuff. So now we have this big push up. We are at we're basically at the highs that we established back in September. But what are the surprises going to be? I mean, as it happened on just a political fundamental basis, Boehner was reelected to Speaker of the House of Representatives. And you might say that's great because he's going to push some stuff through, but he barely got reelected, and there were a number of, I think by less than a half a dozen votes, there were a number of Republicans that voted against him. And at the same time that he was giving his acceptance speech, the FOMC minutes came out saying that there were discontents on the FOMC board that wanted to stop the bond buying by the Fed by the end of 2013. And immediately the S&P went down 6 or 7 handles. So you have that working in the market. To me, just fundamentally, I cannot see any surprises to the upside. All surprises from now on will be on the downside, because now we have a leadership in the House that does not have support of his own party, which means that they have to deal with spending cuts that have to be done in the next 8 weeks. So to say March, people have been calling it March Madness. Well, it used to be a term just referred to for the basketball tournaments, the NCAA basketball tournament. So it could be like a double March Madness. But whatever it is, I think all surprises, even though the waves are starting to look a little bit better on the upside, that we could get a little push higher, I think the surprises are going to be on the downside. First of all, we have to fill this gap, because gaps, and let me show you on the, let me see, let's make this a 1597 and squinch that up a little bit. Okay, that's not going to work. Let's do the 1455. Okay, so this push down here and the reversal to the upside all happened, actually up to this point, happened on Monday. That was, let me see, that was the 31st. Then New Year's Eve happened. Overnight it gapped up. And my point of showing you this is that this had a lot of trading. You know, the tick charts are based on, you have to have 4,181 moves, actual ticks on the S&P in order to get one of these bars. Like one bar, every time this moves a bar, it's 4,181 trades. So it has like a built-in volume scenario to it, or built-in volume algorithm, however you want to look at it. So this is Monday, this big reversal and push up, which looked like it was going to be healthy. Then Tuesday we had the day off for wrong holiday, for New Year's. This is Wednesday, less trading. Thursday, less trading. Friday, even less trading. You can see how these are descending in tick action, hence in volume, hence we're not really sure where this is going. Whoops, hang on one second here. Okay, I also wanted to show you the daily action. This is the daily action on the Euro USD cross that came down. This is last week's action. This is a reversal. Let me move that up. This is an extreme reversal right here, and then it just kept coming down, and that's why this action on the daily looks sideways to pathetically up, and also on the tick charts. So right now we had a close. Let me see. I can't really tell where it closed here. All right, it closed 6, 7. Hang on a second. All right, it closed up here. It closed at this is on the 6th. Whoops, we have to go to the 5th, 4th. All right, so it closed right at 1307. Yeah, 1307. It gapped up, filled the gap. This is on the 5-minute chart of the Euro USD. It came back up again, filled the gap, and then went below it, came back up again, and now is crashing through it. So I'm watching that carefully for signs of what's going on. I like to watch the 15-minute on this. I'm going to move this aside. So right now, my bias is to filling this gap back to the magic 1421, which is a line that I've been following for 2 or 3 years now, and that's actually followed the market. It goes all the way back. I've showed you this before. It goes all the way back to the severe decline back in September of '08. So if we go down and if we fill this gap, then the T1 and T2 will roll back over into negative territory, and as well, already on the 21-minute, T1 is rolled over, and T2 is descending. So it really doesn't look, to me, again, surprises will be on the downside. And they may be political, coming out of Europe, they may be coming out of China, they may be weather related. Whatever they are, I don't see surprises on the upside. So just be aware of this. If you have the opportunity to lighten up your load on this, it might be a good idea to take some profits in here. All right, let's look at a stock. All right, as I've mentioned before, each night I am going to, this year, I am going to highlight one stock for your perusal and to show you the analysis of one stock for a few minutes using the Triton waves on different time frames. So if we look at, let's take a look at Google on the daily here, and Google on the 21, daily on the left, 21 on the right. Now, sometimes you can use the trading wave on the daily T1, T2. And it looks like it partially it works here, but it's kind of past. Let's highlight this a little bit. Different stocks have different. The more it trades, like if you got it even here, it was already past the move, so you wouldn't have been able to cover longs or go short. However, on the upside, you would have made a really nice trade here at 601 and topped out around 730, 740. But you still it still would not have got you still would have missed this move to the downside. So I shortened it up a little bit because basically you have to go through the history of how the waves are acting in terms of the price action of that particular stock. Because all these stocks have a favorite wave, which is what I've observed. So let's go back and look at the 144-minute chart on the cash. And let's go back to that same place where, whoops, where did it happen here? The same place of implosion. Okay, I found it. I lost it on the graph for a minute. The same place of implosion, and we see that even if we move the daily, if we move the 21, if you were strictly looking at the 21 and playing that, then you could have had these little moves and they would have been all right. But you would have missed this big one from 754 down to 678, which was a tremendous one-day move. However, if you were playing it a little bit slower time frame, the 144, which is again a Fibonacci number, which I like to use, then you would have had this play. You would have missed a few points here on the downside. I'm sorry, as the wave went below zero, and you decided to cover it because you were using the shorter ones instead of the very long-term ones. But look at where you would have gotten in here. You would have gotten in with a few days to spare. It would have been an early warning system for you, and you would have gotten in at 754 on the downside on T1, on T2 a little bit less price, T3 right about the same price because it went kind of sideways, and then it basically imploded. So you have to play these stocks different ways. So if you did this on the 144 and then you covered on T1, then you would have covered at 654 or the this is, let me see, the 610 exponential moving average, the green line. And then you would have gone long because T2 is your wave to follow, and you would have been long at 670, and according to this, you are still, the green wave is still up, so you're still in. So this may just continue going up until, let me see what the 21 looks like here. All right, the 21 is gonna keep going up and down against the 377, and you can see it's down here. So even with this tremendous move up from 657 on November 23rd, the right-hand chart, you have all these plays on the 21. So you just have to make sure that the plays that you're using on the 21 line up with the 144. So you're using 144 as an anchor. So if you wanted to use a much longer anchor and using T3 to trade the 144 on the left-hand chart here, then it hit a trend line at 558 on 629. That was, let me see, what year was this? 629.12, and then it moves all the way, up to a high of 754, which you would have caught that downdraft. So really, really nice play. At this point, when you're in, you can walk away from it. This is July 6th on This is July 6th, or let's use T4. This is July 19th, and you get out on the next wave here on 10/11. So that's 3 months you can walk away from this, and you've made yourself 571, 671, about 180 points. Not bad. Not bad for walking away and not having to watch the market. All right, that's all I have for tonight. I'm just going to do a review of some of the services that I have. So if you've heard them before, then good trading, and I will see you at the next update. All right, for those of you who haven't heard this, you can reach me at tritonwaveguy@gmail.com. And the ABC waves that were the precursors to the Triton waves, which are still very tradable, are offered for eSignal, Sierra Charts, Ninja Trader, and TradeStation. Also, if you want, I have started a Triton Wave consulting service. It's a concierge service tailored to your individual needs, and I've highlighted so far Bank of America and Apple and Google. So each night I will pick out a stock, but I'm sure your portfolio has other stocks that need attention. I'm going to leave this up for you to read, and I will leave this introductory offer up for you to read. So, and also I guess I have to show you this page and disclaimer page. So that's all I have for tonight. This should be a very, very interesting week. Good luck trading, and hold on to your hat. We're going to have a tremendous ride the next 6 or 7 weeks. I will see you at the next update. Enjoy the rest of the weekend.